I am recording this between sessions because this genuinely cannot wait, and it is something I have been watching build for months. The safe haven battle between Bitcoin and gold has moved from a philosophical debate about what money is into an actual live market competition that institutional investors are being forced to choose sides on in real time. And what the data shows right now, as I am recording this, is not the clean narrative that either the Bitcoin maximalists or the gold bugs want you to believe. It is more complicated, more instructive, and more actionable than either side is acknowledging. Because in the events that have stress tested both assets over the last period, their behavior has been revealing in ways that pure narrative never could be. The data is telling you which asset did what when everything else was also moving. And if you are not paying attention to that behavioral data, you are choosing between these assets based on ideology rather than evidence. I am recording this right now from Phoenix, and I want you to comment what day and date you are watching from, because the comparison between these two assets keeps evolving, and I want to see where in that evolution people are tuning in. And real quick, if you value this kind of calm evidence-first analysis that respects both assets without being a soldier for either camp, subscribe and comment FinTalk OG so the algorithm knows you want more of this. Now here is the claim making the rounds. Bitcoin is the new gold, digital gold, hard money with a fixed supply, just like gold, but portable, programmable, and accessible to anyone with a phone. And on the surface, it sounds compelling. The supply is capped. The network is decentralized. The adoption is growing. Institutions are buying. But when you slow it down piece by piece, you realize the comparison is partly valid, partly stretched, and the part that gets stretched most aggressively is the safe haven claim. Because a safe haven is not just an asset with limited supply. A safe haven is an asset that holds its value or appreciates specifically during the moments when everything else is failing. And on that specific criterion, the two assets have performed very differently in the stress tests that have actually happened. So, I am going to break down three things. First, what the actual stress test performance of both assets looks like across different crisis scenarios, not theory, actual market behavior during actual events. Second, what the fundamental differences between Bitcoin and gold mean for their respective roles in a portfolio at different levels of systemic risk. And third, how to think about holding both or either one based on what you are actually trying to hedge. So let's start with what we can verify. Gold has a 5,000-year track record as a store of value across every kind of civilizational disruption imaginable. It has survived currency collapses, wars, sanctions, banking crises, and the collapse of monetary systems multiple times across multiple civilizations. That is not theoretical resilience. That is demonstrated resilience across the longest data set available for any financial asset. Bitcoin has a roughly 15-year track record, all of it in a period of relatively stable Western institutional order. It has been tested in risk-off equity sell-offs, in inflation spikes, in a crypto-specific liquidity crisis, and in various regulatory scares. And its behavior in those tests has been informative. During equity market sell-offs, Bitcoin has frequently sold off alongside equities, behaving more like a risk asset than a safe haven. During inflation concerns, it has sometimes moved with gold and sometimes not. During crypto-specific stress, it has obviously suffered severely. Gold, during the same period, has generally behaved as expected for a safe haven. It held up or appreciated during equity stress events. It moved with inflation expectations. It was not correlated with crypto market disruptions because it is a completely separate market with completely separate participants and completely separate infrastructure. Here is the clean way to think about the difference. Both Bitcoin and gold have limited supply. But limited supply is a necessary condition for a store of value. It is not a sufficient condition. The sufficient condition is that the asset maintains purchasing power during the specific crisis scenarios that matter to you. And the crisis scenarios that gold has been tested against, sovereign debt crises, currency collapses, war, sanctions, financial system stress, those are scenarios where gold's history provides genuine evidence of resilience. Bitcoin's crisis history is shorter, and the crises it has faced are different in nature from the scenarios where gold's track record was built. That does not mean Bitcoin cannot eventually prove itself as a safe haven across a broader range of crisis types. It means it has not yet done so. The track record does not exist yet for the scenarios that matter most. Now here is where Bitcoin has genuine advantages that gold does not. Portability. You can move $1 billion of Bitcoin across a border with a private key memorized in your head. You cannot do that with gold. If you are fleeing a regime, if you are in a country with capital controls, if you need to move wealth quickly and discreetly across jurisdictions, Bitcoin solves a problem that gold cannot solve in the same way. Programmability. Bitcoin can be embedded in financial contracts in ways that gold cannot. It can be used in decentralized finance applications, in smart contracts, in payment systems. Gold cannot do those things natively. And accessibility. Anyone with a smartphone can hold Bitcoin. Physical gold requires custodial infrastructure that not everyone has equal access to. Those are real advantages. They just do not make Bitcoin a safe haven in the traditional sense. They make it a different tool that does different jobs. Here is a question for you. If you had to choose one asset to hold for the next 10 years with no ability to sell, and your primary goal was protecting against a serious deterioration of Western institutional stability, would you choose Bitcoin or gold, and why? Drop your answer in the comments because I want to see how people are actually reasoning through the specific scenario rather than the general preference. Now here is the skeptical counterpoint to the gold side. Could Bitcoin eventually develop the crisis resistance track record that gold has built over millennia? Yes. If Bitcoin survives a genuine sovereign debt crisis, a major currency collapse, or a significant geopolitical rupture and holds its value or appreciates during those events, it adds to its credibility as a safe haven. Each crisis it survives strengthens the track record. Gold did not have a 5,000-year record on day one. It built it over time. Bitcoin could be doing the same thing on a compressed timeline driven by technology adoption. Here is how that optimistic case is tested. The next truly systemic crisis, not a crypto bear market, not an equity correction, but a genuine monetary system stress event, that will be the most informative data point Bitcoin has ever generated for the safe haven debate. How it behaves in that scenario will tell us more than everything that has been written or argued about it to date. Same crisis, two assets, very different information depending on which way they move. And I am going to say something that might annoy both sides. You do not have to choose. The binary framing of Bitcoin versus gold is a false choice that serves the partisans on both sides but does not serve you. In a well-constructed portfolio, both assets can play different roles simultaneously. Gold as the deep historical reserve, the thing you hold for the scenarios that have actually destroyed currencies and financial systems throughout history. Bitcoin as the optionality play, the bet that technology and adoption combine to create a new form of portable, programmable value that matters in a digital world. Different jobs, different sizing, different risk profiles, same portfolio. The question is not which one wins the safe haven debate. The question is what role each one plays in your specific portfolio given your specific goals, timeline, and risk tolerance. Now let's map two plausible paths without pretending we can predict the exact candle. Path 1. The next major systemic stress event is a traditional monetary crisis, a sovereign debt problem, a currency dislocation, a banking system fragility event. In that scenario, gold performs as it has historically, providing stability and appreciation during monetary chaos. Bitcoin's behavior is less certain. If it sells off with risk assets, the safe haven narrative takes a hit. If it holds up and appreciates alongside gold, it adds meaningfully to its credibility and institutional adoption accelerates. The outcome of that one event could shift the Bitcoin versus gold debate more than a decade of peaceful bull market has. Path 2. The stress event is digital in nature, a cyber attack on financial infrastructure, a CBDC implementation crisis, a fiat payment system disruption. In that scenario, Bitcoin's specific strengths, decentralization, censorship resistance, portability, could be exactly what matters. Gold's physical nature becomes a constraint when the crisis is digital. The crisis type shapes which asset performs the relevant safe haven function. Both paths are plausible. They just favor different assets depending on what kind of crisis arrives first. Here is what to watch. First, watch Bitcoin's behavior during the next significant equity sell-off. If it sells off harder than gold, the risk-asset correlation is confirmed for that event. If it holds or appreciates while equities fall and gold rises, the narrative shifts. Second, watch institutional behavior in stress events. Are institutions using Bitcoin as a hedge or as a risk asset? The flow data tells you how the money that matters is categorizing it. Third, watch gold's inflation-adjusted performance versus Bitcoin over rolling 5-year periods. The compounding comparison over longer periods strips out the volatility noise and shows you the real purchasing power story. Fourth, watch regulatory developments for both assets. Regulatory clarity for Bitcoin could accelerate institutional adoption significantly. Regulatory crackdowns could do the opposite. Gold has no regulatory risk of that nature. So what do you actually do with this information? Here is a simple action plan. No drama. Step 1. Decide what you are hedging against before you decide which asset to hold. If your primary concern is monetary system stress with historical precedent, gold is the more proven instrument. If your primary concern is digital financial exclusion, capital controls, or censorship resistance, Bitcoin addresses those concerns in ways gold cannot. Step 2. Consider holding both with different sizing for different risk scenarios. Gold-sized for the historically documented risks, Bitcoin-sized for the emerging digital economy risks. Step 3. Do not let either community's enthusiasm or derision drive your allocation. Both assets have passionate advocates and passionate critics. Filter out the ideology and look at the behavioral data. Step 4. Keep both positions sized within what you can hold through significant drawdowns without panic selling. Both assets can drop 50% or more in a bear market. If your position is so large that a 50% drawdown forces you to sell, you are too big regardless of which asset you chose. Now here are my questions for you. In the next major financial crisis, do you think Bitcoin behaves more like gold or more like tech stocks? And do you currently hold both, just one, or neither, and what drove that decision? Drop your answers below and remember to include what day and date you are watching from. Subscribe and comment FinTalk OG so I know you want updates every time a market event gives us new data on how these two assets compare in stress conditions. And share this with someone who is firmly in either the Bitcoin camp or the gold camp and has never seriously considered the other side. All right, stay sharp, and I will talk to you soon. And just so we are crystal clear, this is educational content. It is my take based on publicly discussed information and my own reasoning, and it is not personal financial advice. I am not your advisor. I do not know your goals or your risk tolerance, and I could be wrong. Do your own homework. Consider your situation. And if you need personal advice, get it from a qualified professional who knows your situation.